Good morning, everybody. Hope you guys are doing great. Today, it is retail sales day, guys. Today, we have retail sales data coming out. Tomorrow is the FOMC meeting. Yeah, and it's honestly a really, really important week. It's a really important day. Retail sales are actually pretty freaking important today as well here. So hopefully we get some good stuff. I know I'm a little bit late relative to when I usually start up this stream, especially for retail sales day, and that's okay. But yeah, been a busy few days. Like I said, I'm dealing with the real estate deal that I'm doing and like a bunch of other stuff. So yeah, again, they're expecting minus 0.2% for retail sales. It drops at 8:30 in exactly an hour here. So in 1 hour, we got retail sales data coming out. We'll put a timer up. And again, let me know if you guys think it'll help or hurt the market. The SPY is up pretty big. The SPY is right around lifetime highs. Look at the SPY. The SPY is right at 564s. Lifetime highs are right at this yellow line. It's literally like 15 or 20 cents away from lifetime highs, which is crazy. So, hey, it is time, guys. It is time. Will we break lifetime highs? And it's interesting because we're going into the FOMC meeting, right? So we're going into the FOMC meeting, into the Fed meeting. We'll see what's going on here today. Again, I'm worried. We're probably going to cut rates 50 basis points. I don't think that's necessarily good, you know? I just don't. I don't think it's necessarily good. Why? Interest rates are not that high. They're really not. They're not super objectively high. If you look at the history of federal funds rate, retail sales day, guys. Today we have retail sales data coming out tomorrow. Sorry. If we look at the actual numbers here, right? Here's the federal funds graph. We can put a long-term chart up. Like we are right here. Just to clarify, we are right here. At the very end of this chart, you can kind of see where we are. We are here. And here is where rates have been historically. So, I don't know, man. Retail sales data dropping live today. We will see what that looks like. It's FOMC week. All right, guys. So, yeah, FOMC. Do you guys think the real question today, guys, is do retail sales help or hurt the market? Does retail sales data help or hurt today's market? All right, so it's expected at 0.2%. Is it good or bad? Probably market sell-off regardless what the Fed does tomorrow. I generally disagree with the chat. I kind of agree. I don't know if we're going to sell off. I really don't. I think sometimes the market does a really good job of doing the opposite of what people think. And so everybody thinks we're going to, like, I see a lot of people, every FOMC meeting, they bet on big weakness, right? And that's not always what happens. And so I see a lot of times people are like, yeah, we're going to be really weak for the FOMC meeting. And then we just rip up. We just move huge upside. And so I guess it's not super predictable. It's really not. Like, I tend to think we're going to go down too. I genuinely do. I tend to think we're going to go down. I think 50 basis points is bad, you know? And I think that should show you that, like, I see a lot of people on Facebook and a lot of people, most of the time, they're just trying to justify critiquing one of the political sides, right? But they're pushing for rate cuts, and I don't know why. Like, you know, on one end, I hear them complain about inflation. On the other end, I hear them push rate cuts, you know? And, like, I don't know, man. I just don't think it's the best move, personally. What do you guys think? Should we cut rates 50 or 25 basis points? What do you think would be better? Personally, again, you guys know me. I would much rather do 25. Yeah, I get wanting cheap capital. I understand. And when rates are down, everybody has cheaper access to money. But I don't know, man. Yeah, if rate cuts get out of control, and that's my problem, is that, like, I'm okay with 25. I would prefer no rate cuts, personally. But I'm okay with 25. And you guys got to understand, like, look, I'm buying a house right now. And so if we get rate cuts, you know, it might spark another bull market in real estate. It could. Residential specifically. Commercial's failing regardless. Like, it's on its way out for a lot of businesses in commercial. But residential, you know, has a... It's obviously there's a lag, so we're gonna cut the federal funds rate tomorrow. Eventually, it's gonna trickle into long-term rates, you know, like mortgages. And when mortgage rates go down, what's the consequence of that? Is potentially more buys coming in, higher pricing, you know, supply and demand, you know, inflation and housing, and so it could benefit the real estate purchase that I'm you know, right in the middle of right now. But regardless, I still don't think it's a good idea. We're not going to We're not going to raise rates. We're going to cut rates. Generally, the bigger concern is that generally when we cut rates 50 basis points or more, it equals something breaking in the economy and panic ensuing from it. That's the real issue, is that it could just mean something's breaking. And that's what I'm concerned about. Is like, I don't want things to break. I don't want the economy to tank. I don't want the stock market to fall. But sometimes what I want and what happens, you know, is insignificant. All right, looking at our polls, 54% think it's going to hurt the market. 48% think it's going to help the market. Rate cuts with recession and bear market won't have inflation at all. What? If we cut rates, inflation's going to go up. Rate cuts help Tesla? Yeah, maybe. And we got a video about the FOMC meeting coming out after today's stream, so be on the lookout for that. Again, we'll see what we get, man. I'm excited for the FOMC meeting tomorrow. I'm kind of nervous, and I'm not usually nervous about all these, but I'm kind of nervous about tomorrow's. To be honest, I'm a little nervous. Tomorrow's going to be one of the biggest streams we've ever done in terms of, like, interest, you know, like, we've got so much riding on tomorrow in terms of the economy, the market, the Fed, everything. So much is riding on it. You know, what happens to interest rates, mortgages, real estate, the stock market, the economy, you know. Now, there's a lag. So a lot of people misinterpret. Here's the real nuance of it, is that generally it takes a year plus for short-term rates like the federal funds rate, which is the rate in which the Federal Reserve is influencing tomorrow. Generally, there's a year lag for that to hit more broad lending and interest rates, right? So it's going to take usually like a year plus for federal funds rate to trickle into long-term rates like mortgages and auto loans or wherever. Now, there is this sympathy effect that also happens when the Federal Reserve cuts rates. So when the Fed cuts rates, banks prepare for it, and sometimes they lower rates automatically anyway. So there is some sympathy that happens with it. But yeah, so even if the Fed cuts rates, we're not going to really see those rate cuts for a year plus. And hopefully in that period of time, we're in a better inflation situation than we are now. Why, bro, if you have a big recession? Yeah, but GDP's at 3%, brother. Over 3%, I think, last time, you know? Like, GDP's at 3%, and even with the added numbers for payrolls, right? Like, one bad payroll report doesn't necessarily equal recession. You know, GDP's at 3+%. Unemployment's under 4.5%. Like, lenders have convinced the world that we somehow desperately need rate cuts, and I don't think that's true. I think the only way we get inflation to actually go down anyway is if we go into a recession. You know, that's the only way to really stabilize pricing, because prices have gone up over a 5-year period obscene amounts, ridiculous amounts, and it's just kind of at a point now where everybody, regardless of your status, your social situation, your income situation, I mean, regardless of that, you should not like inflation. It's not good. You know, I've said this many times, but $100,000 used to mean something, right? Now it means nothing. It's right around average, you know. And I know we got some people in this chat that might be walking around making $100K thinking it's some big flex. I'm here to tell you it's not anymore. Why is it not? Because freaking inflation. Inflation has rendered it not as cool as it used to be. You know, now we're talking 200K is kind of a flex instead of 100K. And that's the problem. That's why you should not like inflation, because you might work really hard, get into a financial position where you think you're doing really good at 100K, and then you start to realize you're living paycheck to paycheck. And that's a problem for making that much, you know. And so it affects everybody. You know, it genuinely affects everybody. And you shouldn't, again, my priority is inflation. I want inflation to slow and stabilize. And just because we got it to slow down to 3% doesn't mean anything yet. I think we need to correct it some from the 5-year increase that we've seen. I think we've seen real estate prices go up 60-70% in the last 5 years. I think car prices have been obscene. I think at a certain point it's time to stabilize those things. We can't always have bull markets in those things, and I think the way we do that is through a restrictive monetary policy. You know, that's my stance. That's what I think is the right move. But it's an election year, you know, so the Fed's getting pressure, regardless of what they say. The Fed's getting pressure to stimulate the economy through low interest rate environment, and I get it, but I'm just worried about prices going up, you know. And I think a lot of people that are really genuinely unhappy now, that are complaining, are really unhappy because of inflation. You know, a lot of them are working. They just got to work a lot more than they used to because inflation has gone up. And that's the real reason they're unhappy. And again, rate cuts, a larger rate cut especially, is just going to make that situation worse, not better. And that's the misunderstanding I see a lot of people have regarding these decisions. You know, they act like these decisions are going to fix that problem when really it's going to exacerbate the problem. It's going to make it much worse. And now we're almost certainly doing 50 basis points. Yeah, retail sales expected at minus 0.2%. So retail sales at minus 0.2%. $8:30 a.m. Eastern Standard Time. We'll put this up on screen so you can kind of see it. Right, 100%. The property taxes are going to rise with it. Your homes might go up, but property taxes is going to rise. You know. Now they're expecting 50, and 50 is pretty probable, unfortunately. And that just is a whole other can of worms that we're going to have to freaking deal with here, man. All right, guys. You think you're smart until you got to spell capitalistic. All right, guys. So top 3 spellers in the world right now. Definitely top 3-ish. 50 basis points. I think big bull trap's coming for any rally. Yeah, again, the big thing today is will the SPY break lifetime highs? It's pretty probable. I think it will. I think the SPY is going to break lifetime highs today. Gold climbing back up. Let me check it out. Nvidia, choppy day yesterday. I told you guys we'd probably get chop, and that's exactly what we got. Here's gold. Gold broke lifetime highs, got to 26.17 yesterday, pulling back a little bit now. SPY sitting right around lifetime highs, like right around it. Yeah. Alright, guys, so yeah, I'm looking at everything here today, guys. Ow, dude, I hope I'm okay. This is weird. I feel like it could just be from jiu-jitsu, and I'm hoping it is. But when I woke up this morning, like, my pinky finger hurt. Like, this finger hurts and this finger hurts. And when I close it, it's almost like numb when I woke up today. Like, I remember I got put in a rear naked choke yesterday. One of my main trading partners is a guy named Drew. And this dude is just a freak. This dude is huge. You know, this dude is huge. This dude's like 6'2", 6'1". But just strong, man. Just strong. He's kind of lanky, though. So he's 6'2", but he's not like bodybuilder strong. He's just freaking lanky. You know, it's hard to explain. Just big. Strong, really strong, and got me in a rear naked choke, and I was trying to hold out. I'm trying to hold out, and then I eventually, and I had my finger here, and then I had to just let it go and tap. But yeah, it hurts now, man. It's weird. If you're making 100K, don't complain about inflation. Just rein in spending a little bit. You're not a tycoon, but you're doing fine. Right, but I mean, that's besides the point. The point is it's not sustainable. Inflation's not sustainable. It's not complaining about inflation. It's when you're paying twice as much as you were 5 years ago, you know, it's not that it's too much complaining. It's more so that you have to recognize it's not sustainable, and it's a problem, you know. Because if it continues in this trend, which a low interest rate environment is going to contribute to, if it continues in that trend, pretty soon it's going to get worse, and then it's going to double, and then you're going to have even less money and less money and less money and less money. The easiest way to do this that I've always tried to show people is I pull out my trusty calculator. Let's say we average 5% inflation a year, which is not really where we're at now, but let's just say 5% because sometimes it goes up to 10%, you know. Let me see. Yeah, I'm trying to see what the long-term average is for inflation. This is where trusty AI can help. Chat, you can help me out. What's the average inflation rate over the last 5 years? Or 30 years? When was 30 years ago? It was 1994. Yeah. So I'm trying to look up the average inflation since 1994. I'm having AI do it. I said, what is it? I have to, sometimes you have to be specific. So the way I told it is, what is every year CPI inflation rate over the last 30 years added up and divided by 30? Basically, I want the average CPI inflation since 1994. You have to be specific with AI, but it says so it's approximately 2.5 to 3% is what it's saying. So we'll call it 3 just to prove the point. If you got $50,000, right? Say your nest egg. Say your nest egg is 50K, right? So you got 50K to savings. And say every year you lose 3% of it to inflation. You're not actually losing 3%, but your buying power is going down. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. In 15 years, that amount of buying power is essentially cut in half, right? A little bit less than that, but still. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 25 years, it's overcut in half, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 35 years, it's down everything. SPY just broke lifetime highs, guys. The SPY just broke lifetime highs. SPY ripped up to 565. And so the point is, it's not complaining about prices, because prices naturally go up over time. The problem is that they're going up too quickly. SPY just broke lifetime highs. Got up to 565.28. Lifetime high break on the SPY. Well, yeah, the average interest rate, again, that's more of an argument. If you look at the average interest rate over the last 50 years, we're talking about the federal funds rate. It's going to be probably much higher. So we're below average in terms of current rates, right? So lowering rates now is kind of like, it's unnecessary, right? And of course, lenders are the ones pushing this because lenders, they want low interest rates because they do more business. But it's going to be on the backs of everybody else, unfortunately. All right, anyway, SPY up to 565.20s. The average federal funds rate over the past 50 years from 74 to 2023 is 5.54%. We're actually below average right now. We're at 5.25 to 5.5, so we're below average right now, technically. Slightly below average, but still below average. That is a problem, guys. Yeah, so retail sales data drops at 8:30 Eastern Standard Time today. It's expected at minus 0.4%. Minus 0.4%. It's a pretty big report. I had 12% rate on my first house many years ago. 100%, yeah. 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 Minus 0.2%, guys. Minus 0.2%. What's up, Dean? Again, my issue is this, right? The same people pushing for rate cuts, pushing for low interest rate environment, are going to be the same people that complain when inflation spikes up again. And they're going to blame other people, even though they're the ones pushing it. And I guess it's human nature, but still, be smart, guys. What do you guys think the reaction is going to be for a 50 basis point cut? I have a serious question. Why is Polestar not valued as much as Rivian or Lucid? Because they don't really do anything special. If you want my honest answer, Bow. They don't have a niche. The reason most of these up-and-coming EV brands fail, it's very simple. Okay? The EV brands that succeed, this is very self-evident, right? The EV brands that succeed have a niche. They have a niche, whatever you want to call it. Tesla is obviously kind of like, Tesla has all of it, but Tesla has EVs on lock, right? Obviously, it's at the top. Every other brand, Rivian has trucks. Rivian does trucks and SUV EVs. Really cool. And so they have a niche. If people want a truck or SUV EV, they buy a Rivian. Right, Lucid is I saw a Lucid. They're quick. They're kind of like sports cars, right? So Lucid has sports cars. Polestar doesn't really have any of that stuff. It's just kind of an EV, And so if you got to buy an EV, you got to do the thought experiment of, hey, if you had to buy an EV and you had never heard of any of these brands before and started researching them, which one would you get? Would you get a Polestar? Of course you wouldn't. You'd probably get a Tesla or a legacy brand realistically, or if you want a truck, you get a Rivian. Outside of that, I think Lucid's probably going to fail too because nobody needs Lucid doesn't really have a niche either, and so that's the real problem is that they don't have the customer base needed, and they're public companies, and that's bad. Yeah, but owner finance is an incredibly risky endeavor. It depends on, you see a lot of people that are really predatory with owner financing. Like, the way I see it the most, so sorry. Yeah. So what I was talking about is owner financing. The problem is a lot of people use predatory owner financing, right? And the logic of the business for them goes like this. I understand the logic, right? They say, hey, I'm going to buy a house and then I'm going to owner finance it to somebody else. Going by the numbers, most people are not going to follow through with the owner financing, right? So most people, the people who need owner financing are generally not the most reliable people in that regard. They're just not the most reliable people, So people that need owner financing means they can't qualify for conventional credit, and so they are not. I'm not saying this is you, right? Please don't take this as like an attack, because I'm really not. Like, I'm just putting in general. Obviously, this is just the truth, right? A lot of people who do owner financing are not going to follow through with it, and so the people that are offering owner financing, they're doing it as a business endeavor in which they understand people might move in, pay them for a couple years, and then not be able to follow through with it, change their mind and go live somewhere else. And basically they just made a bunch of money over a few year period without, and they also a lot of the time get hit with pretty high interest rates. You know what I mean? And what you see is a lot of people being really predatory. Like, I see people, it's kind of like the used car market. The easiest way to put it is like the used car market, right? Like, one of the things those little car dealerships will do is they will finance the cars to people who they know probably are not going to be able to pay for it long term, right? So they charge them super high interest, have them pay them, and then when they can't afford it, they impound it and they take the car back, right? And then they do it again to somebody else, and then they do it again to somebody else. So what they would have made $2,000 or $3,000, $4,000 for a used car, they end up making $10,000, $11,000, $12,000 over time, because they understand that they understand that the people they're giving the financing to are not going to be able to finish it. Right? Eventually, they're just going to give up on it. They're going to take the car back. They could do it again. Same thing with owner finance. They know most of the time the people they are financing it to are not going to be able to pay off that house eventually. And so they're going to be able to take the house back and then do it to somebody else and then do it to somebody else. And so you see it a lot with like trailers. I see a lot with trailers like, oh, you can move in on this land and it's owner financing and the rate is 12% or 13% or some obscene number. And they're just trying to find people that are desperate enough to buy a house without credit. And the reality is, like, never, like, I would be very careful taking those deals. I'd be very careful taking those deals because sometimes it's better to deal with a bank versus a person like that, Right, exactly. 100% Caleb. And they'll do a lot of that. It's definitely not the opposite. RAA. Usually it's exactly, look, without even knowing Caleb's situation, I told you guys those deals were sketchy, and listen to what Caleb said. He said my owner was shady and typically ran buyers off before they paid him off. Exactly what they want. They don't want you to finalize that deal. They want you to keep that money machine rolling. Find somebody else to keep it rolling, right? A lot of people do this. I got to frown upon it, but a lot of people do it. But yeah, you just got to have a lawyer and just be ready, Good luck. I hope, it sounds like you got the house. So if you did, congrats. That's great. You nailed it, John. That was the situation. 100%. Again, I could see it. I could see it's a predator. That's why when I originally described it, it's predatory, right? Like that's what they do. A lot of wannabe business tycoons out there trying to scam people is what it really is, coming from the top 3 least business tycoon in the world right now. But no, that's what they do. They find people that it's kind of like they find people that really need it, and they want to call themselves homeowners, and then they get them in bad situations. Is what it is, unfortunately. What do you think of Microsoft? Yeah, Microsoft. I think they announced like a buyback or something. Didn't they announce something like that today? Let me see. I saw it early this morning. I saw it early. Let me find the other one. Microsoft approves a $60 billion share buyback program. $60 billion share buyback is what Microsoft did. Tech giant declared a quarterly dividend of 83 cents a share. It's pretty good divvy. 8 cents, 10% increase over the previous quarter. So, yeah, they increased their dividend as well for Microsoft. Yeah, I got you. 100%. Rent a center. Like, that's why, like, if you ever look at, like, Aaron's. Is it called Aaron's? They prey off of people who can't get conventional financing. And again, I'm here to tell you, if that's you, right? Instead of dealing with those type of places, it's going to be a much better thing to just get your affairs in order. Get your affairs in order. Get your credit in order. If you don't have the credit, and then I would just be really selective over the things that you get, and not, everybody wants to look rich, everybody wants to be wealthy, but sometimes it's just not feasible for those people, and you got to live. I guess the overarching point is live within your means. Yeah, so Microsoft way up here at 438. So again, the SPY broke lifetime highs. It now pulled back a little bit now. Yeah, I mean, Microsoft had that really nice pullback. It's all the way back up to 440s now, though, so it's pretty high at this point in time. Is gold a buy? I mean, guys, haven't you guys learned? I'm never telling anybody that something is or isn't a buy. I don't know. Why are y'all asking me these things, man? Like I said, if Jerome Powell steps outside tomorrow and stumps his pinky toe on his right foot, will the S&P 500 go down? That's my question to you, sir. Anyways, Nvidia breaking highs. Nvidia is what's dragging the market up. Nvidia up to almost 118s. Intel good now? Is it really? I don't know. I'm not buying Intel. It honestly is, though. It's up to 20. I'm not telling you it's good. It's up. It's up to 2230s. Chat, 2230s. Yeah, sorry, Sam. I mean, if you want me to be completely honest, Sam, so Pawn messaged me about it, brother, and it's all good. But to be honest, like, I don't make enough money to afford that place, brother. Like, I don't make enough money to afford a almost $1 million place in Italy, dude. I wish I made that much money, but I don't. You know, like, I wish I made enough money where I could buy $1 million place in another country. Number one, my kids go to school here. Like, I'm not moving. Number two, it'd be. I just, you know, yeah. The real reason, to be honest, is they're not capitalistic enough over there, so it's a risky investment. Personally, for me. You know, it's all love, though. I appreciate you thinking of me, you know. And again, y'all can always run business ideas by me. I appreciate it, you know. I'm never going to hate on you for it. I appreciate it. I wasn't pitching to you, boss. Oh, no. Well, Pawn said that. Well, yeah, it's all good, dude. It's all, bro. It's all good. Like I said, I honestly, I'm not even joking. Honestly, I don't make enough. Like, I don't have enough money to buy that. If I did, maybe I'd think about it, but I don't, you know. Even if I did, I think Kara wouldn't let that fly, you know. But yeah. I mean, we're going to stream the retail sales data. So we're going to stream the retail sales data. We're going to stream into the opening bell today. Retail sales data drops in 22 minutes. With knowing the news that came out on Microsoft, what would you think? Do you think Microsoft is already overvalued? Do you think it has plenty of room to run, or just indecisive? I think it's tough to tell, right? I think Microsoft generally long-term is a great stock. You know, generally long-term, it's a great stock. The problem is that Microsoft is up, you know, 100%. Or not, I'm sorry, not 100%. Microsoft is up like 50% in the last 2 years. So that's a lot of extension on the upside for Microsoft. But at the same time, it's also a pretty healthy, obviously healthy company, right? So it's obviously, like, in my opinion, it's obviously good long-term. Short term, and when I say short term, I mean like short term investment context. Over the next few years, though, I don't know. I think it's up a lot. And I think tech is up a lot over the last few years. So I think if it was me, DCAing is probably the best thing to do if you have to get into it, like DCA into it, so that way there's not as much volatility. And again, maybe it drops for the next 3-4 years in corrections. I'm not sure. You know, I really don't know about Microsoft. I think it's a strong company. The dividend payment's pretty enticing, you know, 80 cents a share. Pretty good, you know, pretty good over a quarter. It adds up percentage-wise. Let me see. So, what is it, 84 cents? Microsoft's what, 430? Yeah, I mean, it's almost 1% a year. Almost 1% a year, depending on where the stock is. So, all right, guys. So Intel is up. Intel is, I don't know if it's sympathy on Microsoft or it has some broader news that come out that's come out with for it. All right, so Amazon boost for Intel. Intel stock went up after the announcement of a chip deal with Amazon and restructuring. So that's what's going on with Intel Amazon deal. But yeah, SPY broke lifetime highs today. All right, guys. So again, we're watching NVIDIA pump up. NVIDIA's up to 118s. We had another green day on Top Step X yesterday. A freaking another green day. And again, I'll keep saying it. Top Step X, legitimately the biggest edge in trading funded accounts. It's the biggest edge you could ever have, in my opinion, right now. Top Step, powerful. Why is it powerful? Because there's no commissions and I can trade micro contracts with only 74 cents in fees per trade. So look at this. Look at my stats here. You know, this is going all the way back. This is all yesterday. Here was all yesterday's trades. Yeah, so here was yesterday's. All yesterday, we had basically one loss. We had one 50-cent loss, but I think that was fill related. Outside of that, we had nothing but green. And you can see it's pretty small trades. $7, $3, $8, $6, $7, $5, $4, $7, $7, $11, $5, $7. $25 loss, though. The only real loss we had. $12, $15, $16, $2, $9, $11, and we had this little 50-cent loss. So we were able to build up profit yesterday. And we've been doing this, and my graph is really nice, honestly. Like, my graph is really nice. I'm going to see what we're doing for the last week straight in this funded account. I want to see what we're looking like. Yeah. Nice little profit factor. Here's my actual graph. And Top Step X has a lot of good ways to, like, watch your data. So again, here is my graph. Here's my stats on Top Step X. You know, we haven't had a losing day on it. And this is why I like the edge can play out. Our last losing day was like a week ago. So I can use micro contracts with no commissions on Top Step X and build up these really cool small profits. Very small, steady, slow gains in these accounts. And it works beautifully for me. And again, Top Step X, again, the single biggest edge in funded accounts. Top Step gives you a demo. They test your skill with the demo account first. If you pass the test, they fund you. If you fail, you only lose what you pay for it. And you got to understand, almost all day traders lose money. I'm going to buy this dip right here. Almost all day traders lose money. And so if you put up $5,000 yourself trying to day trade, maybe you're coming from stocks, you know, you're probably going to lose that $5,000. That's what nobody tells you about day trading. Everybody acts like you're going to be a savant, prodigy. Most people lose. And so if you put up $5,000, you're probably going to lose that if you try to day trade with it. The way you limit your risk in the beginning is these funded account programs. We're going to add to it. We got 2 contracts now. This is the way you limit your risk. If you lose on here, the base one is $49 a month. They give you a demo. Test your skill with the demo account first. If you pass the demo challenge, the base one, you got to make $3K without losing $2K first and following their rules. If you do that, they fund you $50K, 90% split. It's a reasonable 2 to 3 ratio. If you do it, again, they fund you 90% split once you're funded. If you fail, you only lose the monthly subscription. The base one's $49. So your risk is limited. You're still risking something. You're still learning how to trade under pressure, but it's not nearly the amount of risk that you're taking when you first get started day trading. If you put the money up yourself with thousands of dollars, it's not nearly the amount of risk. And that's a powerful thing. And when you also add that I can use these micro contracts like I'm doing now, I'm going to go ahead and take half of this off and just lock it in. You can use these micro contracts, trade very small and have small and steady gains. It really is the biggest edge in trading. Most day traders lose, but in futures, there's no PDT rule. I can day trade the S&P, the NASDAQ. They've been around for over 10 years. They've funded thousands of traders. They paid out tens of millions of dollars. They're one of the most legit in the world, but they are a sponsor of mine. They pay me money. I'm biased because of it. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. Not an investment professional. I do trade off stream. You're not going to see all my trades. Don't copy me. I have no idea what I'm talking about, guys. But with that said, if you want to check out my sponsor, check them out. Here's the link Appreciate the love. I am trading the NASDAQ, the futures contract called the micro NASDAQ. It's basically the QQQ price action. I could also trade the SPY price action. All right, I got to cut this. So we got out basically flat on the trade. Too big of a red action then. I do a little bit of everything. I do swing trading. I invest. I day trade. I'm not hiding my profit. Look, you can see it. I'm down on a little bit on that trade. Look. You know. Like, these are my trades yesterday. These are all my trades. I'm not hiding it. Again, people get desperate to criticize, but I'm not even claiming to be good, you know. Either way, I'm up hundreds in this account. For sure up hundreds. And I'm taking it slow because I got funded in this. This is a 50K funded account, an actual 50K funded account. I'm taking it slow. I'm not going to, look, I'm not one of those guys that needs to sell you on my guru, like me being some type of market guru. I don't care about any of that stuff, you know. I can tell people I'm the worst trader of all time and still make money doing it, you know. That's not what I am. And I think, really, I'd rather be honest with people and just be like, hey, I'm not an investment professional, not liable. I think you also have to understand, though, like, look, there's a certain amount of pressure that you get from trading on stream. And so especially if I'm trying to build up profit, you know, I'm trying to limit that pressure sometimes. But yeah. If you really want to see again, I'm taking small and steady gains. If you really want to see me on this funded account, this is me so far. Okay, and again, it's not huge gains. It's slow and steady. But these are my gains, right? We have had 1, 2, 3, 4, 5, 6, 7 winning days, and we've had 3 losing days. The losing days that we've had have been less than $50, all of them. And this one shouldn't even count because we might make money today already. Like, this is, I'm going to count this as doesn't count because this was just my last trade. But basically, we've had 1, 2, 3, 4, 5, 6, 7 green days and 2 losing days so far, and we'll see what today brings us. So we're accuracy rise, we're running 75-25 roughly in terms of daily accuracy. But again, my plan is to build up small profit on this account and then increase it. You know, my TOS account has had, you know, 6 figures in it for all of this year basically, and so I don't even need to get funded, and so I have the luxury of taking it slow. But I could buy, you know, however much I want and day trade. I could buy, you know, 500 shares of the SPY if I really wanted to. But I'm trying to get funded, or I'm already funded, so I'm just trying to build up small profit. Hey, what's up, Daphne? Not really, Foo. Like, again, I tell people I'm not an investment professional. I think it's important for people to understand that. And while it is a liability thing, it's also because I'm trying to help people, right? Like, you got some people who tell people, like, I guess the point is, you got some traders that market themselves as gurus. Like, here's an example. You got a lot of people who tell people they know what the market's going to do, right? And you got a 50-50 shot. And so they'll be like, hey, the S&P 500 is going to go up tomorrow. And they got a 50-50 chance, you know? And if they're right, they really hyper-focus on it. They never shut up about it, like me sometimes, I guess. But when they're wrong, they just kind of minimize it and don't say anything. You know, I would rather just be real with people about it and tell people, like, sure, I toot my own horn if I'm right, as a mostly sarcastic joke. And the things that I do get right, you know, of course I mention. But I also mention things that I'm wrong about. Like, I was wrong on GameStop. Incredibly wrong on GameStop. I thought GameStop was a short at $4 back in 2020, you know. So definitely wrong. I was definitely wrong on Intel as well. If you want to know another one I'm wrong about, Intel. Top 3 wrongish traders in the world right now. I bought Intel after it dipped under 35, like right around here, and this thing dumped, you know. Definitely wrong on it. And I'm not even going to buy it back. It's one of the, you know, it was a swing trade, but yeah. Right, 100%, Sam. That's exactly right. weird question. When the job numbers messed up a few weeks ago, Mahogany John, the GOAT. Yeah, no. So they did a correction to the job numbers a couple weeks ago. They did a correction to it, but it wasn't recent numbers. They did a correction to like earlier numbers that had previous came out. You know, so they basically corrected and said that payroll numbers were much lower than they were stated to be. Like, I think it was like 6 months to a year ago. Yeah, top 3 wrongish traders in the world. I'm saying wrong-ish. ISH instead of wrongest. But hey, it's okay. I could go with wrongest as well. That's fine. All right, guys. Retail sales data drops in 7 minutes. 7 minutes. We got almost 1,000 people here already. I'll put it in sub-only mode. If you haven't already, you know you want to. Hit the subscribe button. Listen, just try it one time. It might feel good. Do it now. Everybody's doing it. Subscribe, guys. Hit the notification bell. I appreciate it. Are we buying gold? I'm not. Look, you can buy gold if you want to hedge against economic weakness. The problem with gold for me is it's gone up a lot. It's one of the best long-term inflation hedges, but short-term it's risky. And like if you do buy it, I think dollar cost averaging is your friend in these situations. The problem is that gold can downtrend for years, and look at how much it's up. And so I don't want to buy gold as it's breaking highs. That sets me up to maybe get stuck in a long-term year, like 4 or 5 year downtrend in gold, and I don't really want to get stuck in that. And so what I'm doing is I'm probably going to wait and buy gold on its next down cycle as opposed to its up cycle, which is in right now. Right? Gold's been breaking highs. It's up 25% plus over the last year. In just 2023 alone, I think it's up 25% plus. And so that's not generally my favorite time to buy gold because, again, gold can downtrend for five plus years. You know, if you look at a monthly chart, look at this. Gold downtrended from 2011 basically until 2018, 8-year downtrend for gold. You know, gold, it can downtrend longer than that. Gold downtrended from 1980 basically all the way down to 2000. So a 20-year downtrend on gold. And so for me, you know, the uptrends can last too. Like gold has basically been on a long-term uptrend since 2000. Well, I don't know, since gold had, his point is gold can long-term uptrend and downtrend. I just don't want to get stuck in a downtrend. And maybe this is a big long-term uptrend. It's possible. You know, I don't know. For me, I maybe hold on to a little bit of it to hedge against economic weakness if the economy goes goes down. You know, in that regard, maybe I'm a little bit more protected if I hold some gold. But as it's breaking highs, I don't know. To be fair, it can uptrend for a decade plus too, and maybe we're just at the start of it. But again, to be honest, we've been upwardly trending in gold since 2015. So we're at 9 years of upward momentum now. So we've been going up for 9 years in gold. Here's the upward movement. 9 years of green action in gold. And so that's a risky time to buy it for me. Long term, at least. If I'm buying it long term, after a 9-year green streak, I don't know. Personally. Again, be careful. Yeah, I don't know. Nobody knows what's going to freaking happen. Did the Q ever recover from Y2K highs? Yeah, it did. It took a while, though. What is this? Enhanced ETF with implied volatility. Okay. Yeah. Yeah. So here's the Y2K highs. Right. So NASDAQ hit 120 in 2000. It took basically 16 years to get back up there. 16 years. 15 years, give or take. 15 to 16 years to get back up there. So just be careful, guys. NASDAQ is more tech heavy too, so. Correct, Jamal. They don't have to be consecutive though. Yeah, 100%. I understand gold. It's a hedge against inflation. All right, guys, we got 3 minutes. 3 minutes. We got 1,000 people here. A little bit over 1,000 now. Look at NVIDIA break highs. So NVIDIA just broke highs. We'll see what retail data shows up as today, chat. Y2K. I remember Y2K, man. And only downtrended for 2 years, give or take. Yeah, I mean, I'm not acting like it bear trended. Usually bear markets do not last a long time, right? So what I mean by that is, like, there's only been 3 times in history in which we have downtrended in the market for over 2 years, I think. 3 times in history. There's only been 3 times in the last 100+ years since that happened. One of them was the 1929 stock market crash. The other one was 2000, I think. Let me see. I have to go check. Yeah, so we downtrending here. Let's see, we started downtrending in 2000. We downtrended. Yeah, so one of them was probably 2000. We downtrended for 3 years. One of them was 1929. And I don't know when the other one was. But the point is, we don't, like, people here. The problem is, like, one of the things that you heard me talk about a lot in this period of time, right? So this is a example I use. So we got 1.5 minutes, guys. 1.5 minutes. Be careful. Hit the subscribe button. Hit the notification bell. Again, retail sales are about to release. I'll cover this first, and then I'll talk about what I'm going to talk about. With that said, I'm going to put gold up on the right. SPY up, because SPY just broke lifetime highs, and it's pretty close to lifetime highs. Again, retail sales data coming out 0.2% for core, minus 0.2% for regular. We got 1 minute left, guys. 1 minute left. Hit the live button next to the play button. Make sure you're fully caught up on stream. Make sure your live button is red here, chat. All right, here we go, guys. 30 seconds. 30 seconds. All right, guys. Here, this timer's a little bit early, so we got 10 seconds left. 10 seconds. Again, hit the live button next to the play button. Make sure you're fully caught up on stream. Here we go. And here's the report, guys. We'll see what happens. NVIDIA just broke highs. Minus 0.2% is what's expected, and we showed up at 0.1% gain in retail sales. 0.1% gain in retail sales. Core retail sales came in under expected, though, at 0.1% versus 0.2% expected. But retail sales went up to 0.1% versus minus 0.2% expected. So higher than expected retail sales, lower than expected core retail sales. Kind of mixed report, mixed numbers here. And that might be why originally we popped up and then the SPY came down a little bit, because core retail sales did come in lower than the expected number. Base retail sales showed up at positive 0.1% versus a negative 0.2% expected. So we did have higher retail sales than expected, lower core retail sales than expected. And that's what's going on here. Canadian CPI came out as well. It showed up lower than expected. Yeah, so regular CPI month to month for Canada showed up at minus 0.2% versus 0% expected, so better than expected. Regular retail sales just showed up at a positive 0.1% versus a negative 0.2% expected. And again, the market hasn't really done too much here, guys. The market hasn't really done much. I'm going to put these numbers up on screen. I have to do this, so just hold on. I'm going to put these numbers up on screen. 0.1% versus minus 0.2% expected here. And bear with me. Let me know what you guys think. Chat, let me know what you guys think. Also, check out our sponsor, guys. If you want to day trade and you haven't tried futures before, do not risk your own money. Almost all day traders lose. If you put up 4K, you're probably going to lose 4K. If you put up 5K, you're probably going to lose 5K. Almost all day traders lose money. That's just the truth. You're not going to be some prodigy savant. Almost all of them lose money. Now, you can limit that risk with a funded account program. TopStep is one of the most legit in the world. They give you a demo, test your skill with it. If you pass the test, then they fund you. And if you fail, you only lose the monthly subscription. In this case, it's $49 a month. There's no PDT in futures. You can day trade the S&P, the NASDAQ, gold, some currencies. And so a lot of people in Forex probably should try futures as well. No PDT rule. And again, on TopStep X, their platform, there's zero commissions, which is, again, I'm going to go back to it. It is the biggest edge in trading funded accounts, in my opinion. The biggest edge because you can take these small methodical gains, grow a profit, grow a cushion, and there's zero commission. A small amount of fees per trade, only 74 cents for micros. So you can trade micros, limit your risk in these funded account programs. Genuinely the best way in funded accounts right now. They are a sponsor of mine. They pay me money. I'm biased, but check them out. Again, they're an affiliate of mine. They pay me money, so I am biased because they pay me money. But check them out. Here's the link. I appreciate the love. Thanks so much. Here it is right here. Hold on. There's the retail sales numbers right there. All right, I'll be right back. All right, guys. So yeah, retail sales slightly positive. It really hasn't moved much at all. So the numbers haven't really moved the market at all. What are you doing, buddy? Love you, man. You all right? Hey. All right, guys. Sorry. Yes, the duck song. Yeah. So again, the market hasn't really reacted. Gold came negatively down. So gold came down a little bit. Yeah, the big one is tomorrow. Does anyone know if the billing cycle for TopStep starts at the first of each month? I'm pretty sure it doesn't. I'm pretty sure it's whatever day you pay for it, you get charged the next month for the same amount. Or whatever it is. I don't know. Check with them. I'm not 100% sure, but I'm pretty sure. All right, guys. So yeah. So again, look at Nvidia pump up here. Nvidia rising. Interesting. Yeah, I'm pretty sure it's whenever you start, and then you just get hit the next month. But people who use TopStep, let me know. I'm pretty sure that's what it is, though. All right, we're basically completely flat. Gold came down a little bit. Nvidia's still breaking highs. So Nvidia's up there. Again, the SPY did break lifetime highs today. Yeah, it's when they began the first account. That's what I thought it was. I was pretty sure. Yeah. All right, we're gonna get ready to day trade some here today too. There's Nvidia. There's the SPY. Again, it did break lifetime highs. Again, we're gonna be day trading on TopStep X today. On TopStep X. Alright. I'm trying to figure out a better way to do this. See if I can maybe like widen it out and shorten this. That's probably the best way. Alright, so markets started to push up here. Here's the NASDAQ. Here's NVIDIA start to run too. So look at NVIDIA start to go up there. Look at NVIDIA run. So NVIDIA all the way up to 118.30s, 118.40s. SPY is about to break lifetime highs again here, chat. Why would good retail sales give room? Well, higher retail, I wouldn't call it good. It's kind of mixed, right? Number one, core came in at lower than expected. Regular came in higher than expected. So it's kind of neutral, to be completely honest. It's not like it's some powerfully good retail sales data, unfortunately, right? And again, if it was, that would mean less of a need to cut rates, but it's not. It's kind of neutral reading. If it was, we would have had a big upward move, but we just didn't because it's not that good, unfortunately. But, you know, we still got time. We'll see what we get. You know, we'll see if we get some good reports. Again, tomorrow's the big one. I'm going to buy this dip. See if we can get in here. I want to see if the SPY breaks lifetime highs. All right, so we got 2 contracts. I'm going to add up to 3 contracts. See if we retrace back up fast. There we go. Took half off. So we get some more out of this. Oh, bad fill. Oh, man, I thought we were green. All right, there we go. Now we're green. All right, so we just made our money back. Now we're probably green on the day. So we caught the little bounce. Now we're actually green on the day, which is nice. We went from, today we got $3. Yeah, we're up like 10, 15 bucks today, which is fine, Again, it is the day before FOMC meeting, so I am going to bet that we're going to get choppy behavior. And as I say that, look at the market come right back down. So I'll probably buy into this if we do. I'm betting that we're going to get choppy behavior today. Canadian CPI, no offense to Canada. Sorry. No offense to Canada, but they're not really the world standard of economics. All right, I'm going to buy this up. All right, we got 2 contracts here. So we get a little pop. Took half off there, locked it in. See if we get a little upward push. Probably get out the rest flat if we want. SPY's hitting the VWAP level. There we go. We're up a small amount. We're basically flat on this. I just want to see if I can get a little bit more gains here. 7, 9. All right, so we made 15 bucks again from that trade. We're probably up about 30, 40 now. The first part of the day, we try to build up a small amount of profit. I think this is the way in these funded account programs, is you build up a little bit of cushion first. I've said this many times, but I build up small profit, 50, 100 bucks, 200 bucks. Then I'll increase size. Once I have bigger size, that's when I take larger risks. Usually it's after the open, and then I try to just kind of rinse and repeat that, and that way my risk is small on the day, but my gains are big. It's one of the reasons, like, if you look at my actual stats for Top Step here, if you look at my actual stats, right? Yeah, we're up 20 bucks today. But one of the things that you'll see is that we have had 1, 2 out of, let's see how many trading days this is. This 3, 6, 8, 10. We've had 10 trading days, and we've been accurate on 80% of those 10 trading days. So we have only had 2 losing days And in those losing days, it's on average, it's much less than we made on our green days. Made 120 here, made, small amount. Made almost 80, made 60, made 104, made 60, made 100. Today we're up 20. So you can see, like, our losing days are smaller than our winning days. And that's the reason that it's like that, is because on our winning days, we build up a cushion, we take larger risks, and once we do that, we can make 100, a little bit more sometimes. But on our losing days, if we start to just have a bad day, we kind of just shut it down. We don't keep pushing, and that's the key, I think. But everybody's different, everybody's different. Again, today we're going to bet on chop. I'm going to try to roll it up into a good account, but... What's offensive about what I just said? I didn't say anything offensive. You sound like a troll. Me saying Canada is not really the world standard of economics is the truth, right? It's not, Like Canada's GDP is what? It's $3 trillion. The U.S. is $25 trillion. So in that regard, it's not the world standard. Again, Nvidia has the same GDP as Canada. Let me see. And I love Canada. My stepdad was Canadian. He recently passed away. Rest in peace. Good dude. Just a good dude, man. I love Canada. I really do. Batchewana on Canada. I lived in Canada. Great people, great food. I like Canada. I'm not hating on it. It's just not it's a smaller country. Yeah, Nvidia's got a similar market cap to the GDP of Canada. So I mean, your comment does not even make any sense. Which comment? Yeah, 100% Curtis. Yes, it's already the P&L includes the commission factored in already. I'm pretty sure. I'm not 100% sure though. I'm not saying Canada's not needed. Canada, great people. We need them to a certain extent as well for trade and stuff. Like, Canada's a great country. I really do like Canada. They're just not the... again, Nvidia's market cap and I keep saying Canada, and Canada's GDP are similar, So they're just... and again, the U.S. has, 8 or 9 times the GDP of Canada, so it's just a smaller country, and that's okay. In some ways, that's nicer. Like, it's nicer to be there because it's smaller, it's less stress. Right, but I think the point kind of went over your head, Han, which is that Canada's a smaller country, right? The overarching point I'm making is Canada's a smaller country, and so it's not the standard for economics because it's not, right? It's a smaller country, right? You don't use tiny countries as a look at the world economics. It's just not what you do, right? You use the largest companies. You look at, and so, again, the point is here, and I don't know. Retail data was mostly flat, and the market hasn't really done anything either. My bet on the markets today is that we're going to have flat price action, probably. We have the biggest FOMC meeting in a year plus tomorrow, and that means that we might have choppiness. We might have choppy behavior. Yeah, I mean, you might be right. Again, like I said before, hidden. Like, I think inflation might get worse, but I think the real reason we got such massive inflation spikes from 2020 as well as 2008 was from the QE that we did in those periods, right? The QE certainly make it worse. 2020, we sent out the checks as well. And so all of that stuff kind of made inflation much worse. I think things have to be sustainable for me to feel confident in them. And I think, I think the amount that stuff has gone up over a 5-year period everywhere, housing everywhere, makes me worried about sustainability, is what it is. But, anything could happen. Where's the countdown on the screen? Well, the data's already out, T. So, yeah, it's also supply chain problems. Like, it was a lot harder to get things done. And so with that, the costs increased because of supply chain stuff. Right. So stimulating the economy is the same thing as, inflation can be seen as, sometimes some people look at inflation like CPI as an economic indicator, like higher CPI is good. And I don't, of course, but, All right, guys. Very choppy day so far. Choppy day. Again, we're gonna day trade live like we always do. But yeah, so again, yes, we had retail sales data come out. We had Microsoft earnings, or not earnings, I'm sorry, Microsoft news. We had the retail sales report coming out, and we're going to be day trading at the opening bell, so stick around, guys. We are going to be day trading this morning at the opening bell, so again, stick around. Sorry, I know people are going to complain about the keyword noises. I'm sorry. All right. Acting like he's hacking into the video database. He does not type this fast. Bro. All right. I'm not going to do a whole full-blown typing test because that's just unnecessary. Okay. Now you all got me all hung up. Ugh. There you go. So I am typing that fast. You're welcome. Top 3 typers in the world right now. Hey, happy birthday, brother. If they cut, I think there'll be a big flush to the downside where they're going to cut. The question is, how much do they cut? The question is, how much do they cut? You know? Yeah, and again, I think they're going to cut 50 basis points. You know, now what does that mean for economy and markets? I don't know. Yeah, I think you have to, I don't know. I don't know. Yeah, I type about 100 words a minute or so, give or take. Some people, again, I've been accused of just kind of slamming, like just hitting random buttons on my keyboard. It's very provable. I've done enough typing things that people know I'm not faking that. Honestly, it's probably a discouraging thing to the stream. I think 50 might scare people. But I think 50 is overwhelmingly expected at this point in time, too. So, who knows? Here, I'm going to mute the background really quick so I can handle something. All right, so yeah, I'm going to mute the background for a second real quick. All right. Yeah, so I got to mute the background. Bear with me. I've seen a lot of people expecting 50. Yeah, well, 50 is almost certainly going to happen. It's almost certainly going to happen. Right now, you can look at the probabilities for rate cuts. I don't know if retail sales made these percentages move, but right now it's 67-33. So right now it's pretty probable that we're going to do a 50 basis point cut. Yeah. The problem I have is that the average interest rate over the last 30, 50 years is like it's almost 5.6%. We're under that now and we're cutting rates by 50. I don't get it. Why would he go straight to 50? It's an election year. Yeah, and in 2020, like, the people worry about 50 basis points, and they worry about it because generally it signals something is breaking. And in 2020, they did they cut federal funds rate to almost zero, and something was breaking. And in 2008, they cut rates down to almost zero, and something was breaking. And so if it's a big rate cut, so yeah, the consequence of this will probably be at least a little bit of inflation. Now, we don't know how much, but that's one of the big things that I worry about is just inflation problems, you know. I just don't want inflation to get worse from all this stuff. Now, you can look back at history and see generally when the Federal Reserve is cutting rates, a lot of the time they're doing it, and a lot of the time it causes inflation. Not always, right? Like somebody brought up Canada on how they did rate cuts and that it didn't cause inflation. And maybe that's the case. Again, I hope that's the case. I don't want inflation to go up, you know? Like, I've worked hard to make, you know, the amount of the money that I'm making now, and I don't want that money taken away through inflation. The only real way to hedge against it is investing. So you got to invest in something. You can do real estate, you could do the S&P 500, you could do bonds, you can do whatever you want, right? But the only way to really hedge against that inflation is through investing. Yeah, so right now, earlier this morning it was at 65. Um, it was at 65.35, and so those numbers have changed just a little bit now. Um, so those numbers have changed just a little bit. At about 6 a.m. this morning, it was at 65.34. Yeah, so if you want to know exactly what the Federal Reserve is going to do, check it 30 minutes before the report tomorrow. At 1:30, if you check the CME Watch tool, it'll tell you almost certainly what's going to be right. They could surprise. Yeah, I mean, if they surprise people and do 25 basis points, I think that might make the market go up. If rates go down, real estate will be affordable eventually. Yeah, so again, mortgage rates, interest rates might go down in sympathy to this report. We'll have to wait and see. We'll have to wait and see. I think 25. I hope they do 25. Careful to do 50. I don't know, but it's super probable that we're gonna do 50 now. So look at the SPY start to head up, guys. All right. So yeah, so sorry, I'm working on something in the background here. I just want to make sure that this is good. It should be good. Look at the market pop up though. Again, the SPY's getting very close to lifetime highs. Very, very close to lifetime highs. All right. So yeah, let me see if I got an end screen. Yeah, we do. Okay, cool. Okay. All right, guys. So yeah, again, I'm excited for the FOMC meeting. I'm also kind of nervous here. Also, the SPY is getting closer to lifetime highs, so we'll see if it breaks it or not. Again, time will tell. We'll see. Yeah, we do have a video kind of breaking down all the stuff for the FOMC tomorrow. And again, I really don't know what we're gonna do. All right. And then we can... All right, so there we go. We got this done. Let me make sure we're all good. Yeah, we're good. Okay. Let me export this thing. see where I want to save it to. I'll just save it to the desktop. Alright guys, so I can put the music back on now. My apologies for turning it off on you guys. Powell hinted that further weakness in job market would be unwelcome. Of course it's going to be unwelcome. Numbers are only up by like 25K, right? That's nothing. Yeah, retail numbers. Are you talking about retail? What job numbers? There's a lot of job numbers. Intel's up today on a deal with Amazon. So Intel is up a lot on a deal with Amazon. Again, my guess is we're going to have choppy neutral activity. All right, guys. So all right, guys. So all right, y'all can hear the music, right? I just want to make sure. All right, so yeah, we got an end screen coming out. There we go. Checks are good. Keep it private for now. Palantir, but the FOMO is crazy. Yeah, Palantir's gone up a ridiculous amount. You know, a ridiculous amount. I'm going to start shorting this here. It's kind of a risky short because everybody thinks the SPY is going to break lifetime highs. We're already up a small amount on the day. And again, it's a risky short, right? It's a risky short. If the SPY starts to push up towards lifetime highs, you know, that's a situation where we might get stuck in it. Okay, good. So, again, I'm not really... we're taking one contract. I don't think we're going to add any more to it. Okay, so the U.S. industrial production month-over-month data came out too. Oh, so the industrial production numbers come in at 8:15 market time, guys. I forgot about that. And Pawn just gave me some numbers here. So we'll put this data up on screen too. Let me save this so we can go back to it. But again, the industrial production numbers drops very soon. Let me save all the keywords and stuff ready. All right, there we go. Yeah, because we're going to have to cover the industrial production numbers right now, guys. Retail sales data dropped. So yeah, the industrial production numbers. I don't know. I don't know how much industrial production numbers are going to influence things. Yeah, so the industrial production index might be bigger. So we'll try to cover it. Yeah, so the industrial production, 9:15 is when it comes out. All right. Yes, we'll see what the industrial production numbers show up as. I don't know how much these are going to influence things, but we're going to cover them at... I'll put the time frame up. They come out at 7 minutes. Really like 6.5, but that's all right. Yeah. All right. Oh my goodness, I saw this trade. I completely forgot about it, and now I'm down. I'm going to have to sell. Oh my goodness, I am short. I didn't really... Oh, crap. Oh... All right, I just covered half of the position here. We lost $12. Now we're up a little bit. So we're still green on the day. I completely forgot about this trade as I started optimizing my title and keywords. So I guess I'll let this roll. You know, I don't really want to hold it through the industrial production numbers, and I do see Nvidia start to shoot up. So I'm going to cut this and get out. We lost $13. It's okay. 6 minutes until the data release. Yeah, September is typically the September slump, and that happening during the FOMC meeting might be like a big thing. Yeah, inflation is helping my losses out, I guess. Yeah, and it looks like that was a good exit because we did pump up a little bit from it. Yeah. Yeah, I completely forgot I was in a short. All right, guys. We're right at the highs of the day for the SPY. Right at the lifetime highs of the day for the SPY. Nvidia's right at the highs of the day here. So be ready. All right, guys. So, again, this is crazy big, to be honest. Crazy big. Yeah, we got Powell tomorrow, guys. And again, this is the whole thing that's freaking out the market, to be honest. Everybody knows this. I thought I had a better Powell look. Where's Powell at? I gotta name this dude. All right, so we got that pullback here. Industrial production numbers drop in 12 minutes or in 2 minutes. So it's 2 minutes, less than that, really. Yeah, so got a little dip here. Here we go. Industrial production numbers drop. 1.5 minutes, chat. 1.5 minutes. All right, here we go, guys. You ready? Here we go. Industrial production numbers dropping in 20 seconds. 20 seconds. Here we go. 5 seconds. This timer's a little bit early, just to clarify. All right, industrial production numbers. They're supposed to be released right now. I'm not showing them out yet. Market hasn't really moved. I'm not showing anything yet. Let's check a different source. You guys see the industrial production numbers out yet? I'm not showing they're out yet. They might be late. Check other sources. Nope, nothing yet. They're late. Okay, there they go. Industrial production numbers showed greater than expected. Capacity utilization came in at 78%. Industrial production showed 0.8% versus 0.2% expected. 0.8% versus 0.2% expected for industrial production numbers. They're a little bit late. I don't know if this is going to move markets in any big way, but much higher than expected here. So yeah. Yeah, it's a massive important report. Yeah, this is massively important. Not this report. Tomorrow's FOMC meeting is what I mean by massively important. Not this. This is The industrial production numbers kind of but the market's heading back down again. We are getting choppiness. So we are getting choppiness. Yeah, so they cut it out good, but let me see. Yeah, so again, we're going to switch back to everything else that we had. Yeah, that's normal. Alright, and then we can just kind of go back. So yeah, industrial production numbers did drop, but we didn't really get much of a reaction to it. Alright, we're back. Nothing happened. Yeah. We're covering all the data. It's not always huge, though. Yeah, so does Adobe let see all these places that say I'm trying to cut out an image. Any good examples? Any good examples of free tools that'll cut out images? I don't see any. None of them are good. Oh, there we go. Cut them out. Okay. Honestly, dude, these AI things should be better, dude. You know, I got one. Cancel. Yep, leave site. You should be ashamed. Okay, that's good enough. Alright, we got one. Yeah, so again, you guys ready for the opening bell? Maybe I'm using too big a font. Let me scale down a little bit. I think that's probably going to work. All right, so we are choppy, completely choppy. Sideways, neutral. Exactly what I thought we would get today, unfortunately. Literally exactly what I thought we'd get. Let me see if I can do 1.9. I'm going to catch back up on chat in a second. Well, Powell, what color will Powell's tie be is another huge question that everybody needs answered. Will Powell have... All right, so we got a little dip here. I'm going to start buying this dip up. One contract. Go ahead and add to a winning position. 2 contracts. Let's see if an increase. So we got some profit on the day. We're going to add 3. Take our little risk. There we go. Take half off. Take most of it. Add some more to this one. Take another piece off. Get out now. All right, so we just made $20. 20 bucks just now. Got right back in. Got right back in. Green tie? Will it be green? I don't know. 8 minutes, chat. 8 minutes. People in the forum say no cut now. That would tank the market. Yeah, but a cut's happening. You know, like a cut's almost certain to happen. It's not something in which like we even have like an option. Like we're almost certainly going to cut. I mean, anything could freaking happen, right? But probability wise, it's not super probable that we're just not going to cut, you know. Yeah, so the question is, so again, tomorrow's FOMC with Jerome Powell is huge. It'll be the first rate cut we've seen in years. The first time Jerome Powell and the Federal Reserve pivot from a high interest rate dovish stance. And the question is, will we see massive volatility? Remember, we are not market professionals. Yeah, so interest rate environment. All right. Yeah, so we are coming right back down. I see choppiness. You know, we're kind of bouncing on the SPY at the volume weighted average price. All right, guys, so we got Jerome Powell. Yeah, so all right, here's the opening bell, guys. Y'all be safe, man. Yeah, again, y'all be safe. All right, so we're back down. I'm going to buy this dip. We got 3 minutes until the market open, so I'm going to see if we can ride a quick little bounce. We'll take 2 contracts to try to expedite this. And if it doesn't work, okay. Now we're down $10. I'm gonna take one more risk and then add to it. There we go. There we go. There we go. So another $20 bill here. We caught the bounce right in time. I wanted to cut it before the market opens too. So small steady gains. Yeah, I'm trading small. I'm building up a cushion. This is a 50K funded account, guys. Right, so I'm trading small. I'm building up a cushion in this account before I take large risks. You know, so you can kind of see it in my steps here. We got 2 minutes. Right, you can see it in my stats. Right, like I'm trading small and I'm green. I'm very green. Like people can say whatever they want. I'm very green in this funded account. Like we have had two losing days out of 10. 2 out of 10, 80% daily accuracy so far this month. We're going to spend a month building up profits, spend the next month scaling up is the plan. And I think you have to treat these funded account programs like this. And again, I think Top Step's the biggest edge one in the market. You got no commissions, tiny amount of fees with micro contracts, 74 cents a trade. So I can take $20 trades, $10 trades and still profit with micro contracts and futures. If I trade the regular NASDAQ, I can be down thousands in minutes. In this, I can ultimately trade small, limit my risk. There's no PDT rule in futures. Top Step gives you a demo. Test your skill with the demo. If you pass the test, they fund you. If you fail, you only lose the monthly subscription, when in this case it's 49 bucks. And most day traders lose. And so if you put up $5 grand of your own money trying to day trade, you're probably going to lose it. This is objectively the truth. But I am biased. They pay me money. I'm biased. I really just think it's the best of both worlds. You can limit your risk, but if you're good enough, get funded and then fund your own account with profits if you're really good enough. But you got to be pretty good as a trader to do it, and that's not most people. Most people will lose money. But if you want to check it out, they are an affiliate of mine. Check out the link. There's the link right there if you want to check them out. Again, understand CFTC 4.41, hypothetical or simulated performance have limitations, guys. Market opens up in 20 seconds. 20 seconds. I do trade off stream. You're not going to see all my trades. Not an investment professional. Not even claiming to be good. Don't copy me. But yeah. Here we go. Here's the market open chat. Be safe. Let's do this. All right, there's the market open. I'm going to shorten this and so we can really kind of day trade larger here. There's Nvidia ripping up, breaking highs at the opening bell. Okay, I don't know what happened to my mic. Let me know if the sound is good. The sound should be good. All right, guys, so we're just sitting tight, hanging out, waiting. Big green action. Look at Nvidia rip up. I'm guessing the SPY is going to start testing highs, but it is the day before FOMC. Part of me wants to short right now, but I also understand the risk of it breaking highs and ripping up, and there's the rip. But I also, it's too early after the opening bell for me to start. So we're gonna let things settle. All right, guys. All right, so we're about 3 minutes into the opening bell here. The SPY is what I'm watching really closely because the SPY is getting ready to break lifetime highs. Yeah, Sam, I just got your email. All good, brother. All good, man. Yeah, I mean, maybe. I'll see if anybody's interested in it that I know. All good. All right, so now we're finally dipping down again. The SPY is right around lifetime highs. I'm going to go ahead and buy this pullback. It might be a trap, but the SPY is so close to lifetime highs, I think we have a solid little chance. Oof! Just getting punished, though. Yeah, I got to cut it. What a drop. So we lost 40, 50 bucks just now. Very quick pullback. It was a trap is what that was. That was a market maker trap. We got it right up to the previous lifetime highs. They knew everybody would buy that dip. And yeah, I got stuck in it. Luckily, we're about flat on the day now. But definitely not fun. Yeah, and again, I think we're gonna get choppiness today. I'm gonna wait and let a range play out. I don't want to lose too much. Again, like you guys see, like we've made money on 8 out of the last 10 trading days, and so like if I have a losing day, it might be time for it. It's all good. I just gotta be careful, you know. I'm gonna buy this dip up now. I'm gonna take it very slow now though, since we're down, you know. Try to take slower, longer term trades instead of small scalps. We will add to this if we can, but not a huge amount. Sheesh, man. I'm just getting, like, we are getting volatility today. But certainly not the volatility we want. Yeah, I gotta cut it. I might start to just kind of slow it down for the day, guys. So the string of trades since the opening bell has been very big red candles. You know, like, let me see how much we're down. We're down 50 bucks today. Not the end of the world, right? Like, you see most of our winning trades are higher than that. So it's all good. But yeah. Certainly not what we want. And I think one of the reasons I'm doing well in this account is because I do have risk management. And so I have to be smart here. Well, I like choppy. Choppy's fine. And really, I'm attacking choppiness. But these are big swings. You know, big swings. It is the day before FOMC. I was hoping we get sideways neutral action, but you never freaking know, I guess. Here, I'm going to mute the back music real quick. I just want to check something. Make sure you guys can... Yeah. Yeah, so again, we're moving back up. I'm going to take one more position. One more position. And I am going to short this. We got a nice little swing. I'm going to add to a winning position now. Took half off. Oof. Big swings. We're about completely flat on this position now, but now we're not. Now we're back to roughly flat. Slightly green now. We're slightly green on the last two trades. We already took profit. We're going to add to this now. 2 contracts. Took more off. Took more off. Okay, so we just made another $45. We're basically flat on the day now. So, not a bad little swing of trades there. And again, we're trading on a Top Step funded account, 50K funded account. All right, so now we're breaking down again. I'm going to buy this dip now. All right, so we just made another $15. So we might actually be green on the day now. Let me see. We're flat. We're down $6 net. So we'll see if we can go green on the day again. Keep our green streak active, but I don't want to. All right, so we're going to add down here. We'll add to it here. All right, so we are now effectively green on the day, catching this move. Whether I want to continue is another story. Yeah, so again, I'm now green on the day. I don't know what I want to do here. Slightly green. All right, guys. So again, today I'm trying to see what time frame. All right, so what time is it local time in Texas? Okay, good. That's right. All right. So yeah, I'll put out the yeah, we got a premiere coming. Make sure it's good. All right, so we're choppy right now, chat. Yeah, we got a rare video that we're coming out with. We got a premiere that's dropping in a couple minutes. Yes. John, get a coffee? I don't know. I'm going to buy this dip again. We're slightly green. I don't care if I end red. It's not about my stats, to be honest. I'd love to make more. Okay, we just made more. So, yeah, we're probably up 20, 30 bucks. A small day. I'm okay with that. You know, slow and steady wins the race sometimes, I think. Again, if you want to check out Top Step, this is a Top Step funded account. You know, I think the smart move is, it really is, in my opinion, again, I'm up like 16 bucks. It really is the best edge in trading funded accounts right now. Here's my stats in it so far. You know, we have only had 2 losing days out of 10. We're doing pretty good. So stick around, subscribe, hit the notification bell, guys. We appreciate it. Again, they give you a demo, test your skill with it. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, it's 49 bucks. It's you know, it's much less risk. Most day traders put up 3, 4, 5 grand for their first account, lose, and then lose the entire account. Lose 3, 4, 5 grand. Very common. I did it. Almost every trader I know did that at the beginning because new traders lose money. I wish I would have had something like this. It would have saved me from losing too much money in the beginning. But again, they're a sponsor. They pay me money. I'm biased. But if you want to check it out, there's 0 commissions. The reason I can have these small days and build up a nice cushion before I take big risks is because there's 0 commission on Top Step. I don't know how long I've been muted, but the reason I'm able to do this is because I can build up a small cushion on Top Step X and take these small winning days because there's 0 commissions on Top Step X specifically. And so it's a great way to learn how to day trade. Almost all day traders lose. Check them out. They're a sponsor, though. They pay me money. I'm biased, of course. I always say that. I'm going to, in a second, we're going to redirect to my video, guys. So in a second, we're going to redirect to the video I have debuting today. So we're going to talk about the FOMC meeting in this video. We're going to talk about all that stuff. We're going to redirect. So literally, as soon as we close this stream, it's going to send you on over to our FOMC video that we going on. It's only a very short 4-minute video. Watch it, watch the whole thing if you can, stick around to the end. Hit the like button when you join the stream. Okay. And yeah, I'll see you guys later. Again, we got 1 minute left. 1 minute left. Not bad. I thought we would get choppiness today. We got choppiness. One of the most predictable things about these big conferences and stuff like that is the choppy behavior that we get ahead of it. We almost always get choppy, neutral, boring activity leading into these reports. Also, guys, we're going to be on with Mitch on Mitch's stream on, I think it's Trade the Pool, later on at 10 o'clock. So if you join our Discord or Twitter, you follow me at Beginner Trades on Twitter. If you join our Discord, I'll send you that link too. But yeah, it's going to be at 10 o'clock. We're going to be heading on over to Money Mitch's stream. So y'all be ready for that. Be ready. Guys, be ready. Oh, hold on. I got one more thing I got to do. Let's do just a 1 minute countdown. There we go. All right, guys. So, yeah, again, we'll see you guys over at the other stream. As soon as we close this down, it's going to bring you over 10 a.m. Eastern Standard Time, so 9 a.m. So, in 15 minutes, basically, we're going to hop on his stream. So, again, it's going to be on Trade the Pool's YouTube channel, Money Mitch. Let me make sure this premiere is kicking. Oh, that's 2 premiere. All right, so yeah, I don't know why. I saved it to only, I guess I never saved it. I guess I didn't save it. So it's a 2-minute premiere. So again, as soon as we close this stream, guys, it should bring you to the new stream. Again, as soon as we close this stream, it should automatically redirect you. If it doesn't, for whatever reason, I'll put the link up right here. That's the FOMC video that we're going to be pivoting to. So again, it should direct you all the way there. Chat, it should direct you all the way there. And again, I'll see you guys over there. Love you all. Y'all have a great day.